Ladies and gentlemen, good day and welcome to the Tiger Logistics India Limited Q1 FY2024 earnings conference call hosted by Eric Capital. We have with us today from the management Mr. Harpreet Singh Malhotra, Chief Managing Director of Tiger Logistics India Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Before we proceed with this call, I would like to take this opportunity to remind everyone about the disclaimer related to this conference call. Today's discussion may be forward-looking in nature based on management's current beliefs and expectations. It must be viewed in conjunction with the risk that our business faces that could cause our future results, performance, or achievement to differ significantly from what may be expressed or implied by such forward-looking statements. I now hand the conference over to Mr. Harpreet Singh Malhotra for opening remarks. Thank you, and over to you, sir.
Thank you for the introduction. Good afternoon to everybody, and a very warm welcome for today's earning conference call of Tiger Logistics. And we are here to discuss the Q1 FY24 financial results. And we are grateful that everybody's here, and so that we can discuss and see what we've done in the last quarter, and of course how we are looking at the coming quarters and future. So just a little brief about how logistics sector is, shaping up, how it is, what's all happening in the logistics sector. As you know, that Tiger Logistics is involved in the international logistics, wherein we move goods from one place to the other, especially from India into various parts of the world, and also from various parts of the world to India. So what we've seen in last three quarters plus is that there has been a sluggishness in the global demand, primarily, of course, because of the geopolitical factors and reasons, and also of the reasons that a lot of companies and big buyers had, overstocked themselves in last few quarters. So if you look at the last year numbers, we could see that, it started building up in the last quarter, the December ending quarter. It has started building up where we felt that, yes, there was, most of the big buyers were overstocked and sitting in a lot of inventory. So we are seeing that that inventory definitely getting liquidated, but it has not bounced back to the same levels what it was last year. So I think we are hopeful that in coming quarters this should get better, because surely there is no demand, there is no apparent sign of any recession in the western side or any other country other than Europe. But what we are seeing is that definitely there is some pressure on the demand. So people are little slow, and they are being observant. They don't want to sit on a big inventory, so they are little slow in ordering. Another reason, another thing which we are seeing is that globally there is a slight issue of availability of foreign exchange. So we are seeing that the banks are facing some issues. International banks are facing some issues in opening letter of credits on Indian exporters. There is no apparent reason being given. The only reason being given is that they are what they are facing is that the banks are focusing more on essential goods, or focusing more on energy requirements of those countries, rather than opening LCs for these consumer products. So that is another issue which is kind of slowing down the business overall, especially the global business. Other than that, I think we are very bullish about India being looked upon as a secondary supplier, and with the China One policy of most of these big companies, I think it's kind of giving good opportunities to suppliers in India. So we are very bullish about that, and surely those things are shaping up well. And we are very hopeful that in times to come, this will only get better. As far as the Indian logistics is concerned, there is no doubt that logistics sector in India is a highly focused sector and area for the government of India as well. With the launching of the national logistics policy, the government is, the government wants the logistics player to become more efficient and also work towards reducing the cost. So I think this is a right approach, because on one hand, government is focusing on improving the overall productivity of the industry and their capacity and focusing on exports. I think this can be achieved very well if we have a good logistics policy in place. So the Make in India will be successful only if we have a good logistics support system in place, which the government is definitely working on. We are looking at there is definitely improvement in the ease of doing business, especially in the logistics sector, whether the ports or the customs or other intermediaries which are involved in the whole supply chain business. So the ease of doing business has definitely improved a lot. So I think we are very bullish about the Indian logistics sector. And now coming back to specifically what's happening at Tiger Logistics. So I would say that overall we are also not immune to what's happening globally. So the freight rates have come down drastically. Rather, at this point of time, the freight rates are much lower than what they were at pre-COVID levels also. So that is primarily because the reason is that we don't see the demand picking up. So on one hand, the shipping lines and other people have increased their capacity, meaning thereby space on the vessels, but the demand hasn't picked up what they were expecting it to be. So that has kind of, brought a situation that where the supply is in abundance and the demand of containers is slacking. So that is what is, pushing the freight southwards, very, very drastically. We hope that this situation should improve in coming quarters, because we feel that the business is bounce back, maybe September, October onwards, the business is going to bounce back and we will see more, orders coming in. But yes, so that's the reason, we've seen a decline in our top line, because that is the reflection. Top line is the reflection of the freight which we are booking. But we are happy to share that overall the PAT margin percentage has improved, which is helping us. For us, the launch of the digital platform is working very well for us, where we are investing in terms of manpower, where we are investing in terms of, increasing our access to small and medium enterprises. So that is working well for us. We've already tied up with One NDF for One NDF is a startup who specializes in arranging funding for small and medium enterprises. So we've had an exclusive agreement with them, and in a week or so we will be sharing the news where we will be having an exclusive agreement with one of the largest Indian banks. So that will give us a big product in terms of what we are which is one of our finest products in Freight Jar, in the digital platform, where we are looking at cargo value financing. So this will definitely improve our overall access to our clients and businesses. So freight jar definitely has been received very well by the industry, where we are seeing that we are seeing a good attraction of new customers which are helping us. They are very keen to know what we are doing, and I think it's shaping up well. We are hiring new people, new sales in that sales vertical, so they are only selling a digital product, which is a very which looks very good at this point of time. Other than that, what is helping us is also that our imports, where we were, as you know, that Tiger Logistics traditionally has been an export-oriented company, where we were only involved in export logistics of goods. So, but what we've seen in last 2 quarters, we've been focusing on imports, and this focus on imports has come through freight jar, where we are seeing that the clientele which is coming to us is they are keen more for working in the import side. So that has helped us in improving our imports. So of course, in exports we were leaders in certain trade lanes. So in imports also now our business is increasing, which is showing in the numbers also, where we've seen from last quarter to this quarter there has been more than 100% increase in our business. And secondly, another big enabler for growth is we getting the IATA agent accreditation. So IATA has given us a IATA accreditation, where we can now participate in big air freight exports and imports. So we can issue our own AV bills and work as a full-fledged IATA company. So this is also helping us in increasing our air freight business. So overall, I think we have all the enablers, to grow now, and of course our TU volumes has also increased to more than 8% from last quarter to this quarter. So, in fact, if you see that the last quarter, which is the March ending quarter, it is supposed to be the highest quarter. So we are improving our volume growth from that quarter in this quarter, which is the June ending quarter, which has always been traditionally the lowest quarter, where the volumes are always the lowest. So we are if you compare ourselves with the highest quarter to the lowest quarter, there has been an increase in the overall volume. So what we are doing is basically adding new businesses, adding new trade lanes, which we were not involved earlier. So this is kind of helping us, in, of course, getting into new businesses and increasing our footprint into newer industries. So that's what we've been able to grab some new government tenders as well, where our footprints into government businesses is also increasing quite a lot. So overall, what we are seeing is that business is increasing and improving for us, and I'm sure as the freight rates increase, as the freight rates get better, the overall numbers on the top line and the bottom line will only get better. So in short, this is what what I would like to say, and we've already shared all the numbers, of course, on the exchange, and everybody is aware of that. So I'm okay to take any questions or any queries if anybody has. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Mayank Chauhan from Value Growth Advisors. Please go ahead.
Hello, sir. Congratulations on your operational number.
Thank you, Mayank. Thank you. Thanks. Yeah, please tell me.
Mr. Mayank,
Can't hear you.
Please go ahead.
Hello. Am I audible now?
Yes, you are audible now. Please go ahead.
Sir, how do you see this growth for the rest of the year? Is these things stabilizing now?
So, Mayank, as I was saying that in terms of volume, yes, definitely we are growing each quarter and we are adding new verticals, new products in our kitty. So, I'm very hopeful and I'm very, bullish about, what growth we will be achieving in coming quarters because overall our volumes are increasing and that is what is important for us. Because since we are in a cost-plus model, the cost may go down or go up. But what is more important is that how we are shaping up in terms of our volumes, in terms of our business volumes and into newer products. So if you look at last 2 quarters or 3 quarters, we've only added new products and in our kitty. So that will fuel the growth for us in the coming quarters. So I'm very bullish about, about having a good business in coming quarters.
And my next question is you were talking about imports getting, due to trade jar, the imports are getting improved. Can you shed some light on it?
Yeah. So what we are seeing is that through the digital platform, the queries, the number of queries which we are getting is more for imports. It's more for import businesses. So that is, maybe people don't have very reliable players in imports, and maybe there is some kind of a disconnect in the pricing as well. So people are very keen to use the digital platform for their imports, and that is helping us to develop our import vertical as well. So it's good for us both ways because we were never present in imports, and now with this digital product, it is helping us in imports as well. Of course, we are doing a lot of export also on the platform, but it's a double advantage for us that with this platform we are able to develop our imports also.
Yes, sir. Thank you, sir.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Next question is from the line of Deepak Kumar from Planify Capital. Please go ahead.
Hi, sir. Sir, my question is that, as you mentioned, our volumes are increasing, but on the other side, freight charges are declining. But as we are working on cost-plus model, sir, if the volumes are increasing, why our operating profit margins are declining quarter-on-quarter?
Sorry, can you repeat your question? Last portion, you said that can you repeat the question? I missed out the last part of it.
Sir, as I'm saying, as we mentioned that our volumes are increasing. On the other side, our freight charges are declining. But we are working on cost-plus model. If our volumes are increasing, why our profit margins are declining on quarter-on-quarter basis?
Yeah. So what happens is, Deepak, when I say that ours is a cost-plus model, so when my cost is please understand that if my cost overall is suppose what it was last year, if I was to ship a container from here to Mexico, it was close to around $12,000 per 40 feet container. And today, and I would, even if I would look at it, even if I'm looking at a margin of around 5-6%, 7%, that is the gross margin I would look at it, overall. Maybe but now my cost of that same container has come down to $2,000. So even if so definitely my percentage in terms of my percentage profitability has gone down. So that is what is affecting the profitability also. So that is, but when my margins are increasing, when my volumes are improving, it is not getting reflected in the numbers because the volumes which are increasing also are being booked at lower freights only, not at higher freights. So that is the reason.
Okay, sir. But, sir, hello? But, sir,
Yeah.
as we are looking at lower freight charges, but there should be our margin on a constant basis, no? So we are not getting that.
Yeah. So if you look at it, my PAT percentage margin has gone up, but that is the reason my PAT percentage margin has improved. But if you look at even at our even my EBITDA margin, for that matter, has gone up from last quarter to this quarter to from 4.2, it has gone up to 6.1%. So that improvement is definitely there. But overall, if you look at the top line is not increasing because the freight, the volume has gone, the freight value, in value terms has gone down. So what I was shipping for one container into Europe or into South America for $10,000, $12,000, that business has, that container value has come down to $2,000, $3,000, you know. So that is what that's the reason for that.
Okay, sir. Okay.
Thank you.
Yes, sir. Then for my side.
Ladies and gentlemen, before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Asha Patel from Patel and Advisors. Please go ahead.
Thank you for the opportunity, sir. Sir, just wanted, you said we have received ICRA accreditation. Wanted to understand what is our thought and how this segment will contribute to our business in say next 2 to 3 years.
Yeah. So what happens? You're Ms. Patel, yeah?
Yeah.
Yeah. So Ms. Patel, what happens is that Tiger Logistics has always been a sea freight company where we were doing logistics mostly by sea freight on the vessels, on containers, in break bulk or in containerized cargo. We were not involved in air freight business, you know, because for doing air freight business, you need a IATA accreditation. You need a certification from international. It is a international air traffic controller, air traffic authority, where you can issue your own airway bills. So what happens is earlier we had to negotiate with other IATA agents, and they would in turn negotiate with the airlines and quote the rates to us. But now with this IATA accreditations, we can negotiate directly with the airlines and issue our own airway bills. So what happens? Definitely my costing becomes better, and I am able to participate in big businesses like businesses of pharmaceutical, businesses of high fashion garments, aeronautical spares, a lot of government tenders. They want IATA companies only to participate. So that opens a separate division, separate avenue for us for growth, you know, which was not available to us earlier. So we are very happy about this accreditation and very bullish about how the business will shape up, because this opens another big business opportunity for us, which was not possible for us to participate earlier.
Right, sir. Right, sir.
Yeah.
Congratulations. Then, sir, just a follow-up question on in last 2-3 quarters, I have read the transcript. We are looking for an acquisition, which is it now finalized, or you are still looking out for it?
It is. We are already looking at some companies, and I think in coming weeks we may share some good news with you. But it hasn't been finalized as of now. But yeah, we are definitely closer to it. But let something happen, then we'll share it with you.
Sure. So just a last question on you said the recession of heat on the volumes. So do you think H2 will be better than the H1?
Sorry, the last question, H1 would be better than?
H2 will be better than H1?
Yeah, see, what happens is traditionally also always H2 is better than H1, and that's what we are also expecting, and businesses also improving from what it was. So I think it should be better than H1.
Thank you, sir, and all the best.
Thank you. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may press star and 1. Participant, to ask a question, you may press star and 1 on your touchtone telephone. So we don't have any questions in the queue. We have a follow-up question from the line of Deepak Kumar from Planify Capital. Please go ahead. Mr. Kumar, your line is unmuted. Please go ahead.
Hello.
Yeah.
So as you mentioned that right now freight rates are at lower price, but how we can see in future that it will increase, because if we let increase, then we go more profitable.
Yeah, 100%, because we are also very hopeful that the freight rates will get better in coming quarters, because the demand is picking up. So it is just a matter of time that if the demand it gets better, then the freight rates will definitely get better. So we are also, we are also hoping that the China volumes improve, because if the China volumes increase, the Indian freight volumes will also increase. So it is directly related with the business happening out of China. So in coming quarters, we on a daily basis, we are reviewing the situation in China also, because we are seeing the volumes ex-China also going up now, and we are hopeful that it will only improve in coming quarters. So we are hopeful for that.
As you can see that China's exports are declining slowly, but and the situation with geopolitical with other countries, they are not good for the next 3 to 4 quarters. So we can expect it in for next 2, 3, 4 quarters that it will get improved.
Yeah. So I would like to correct you here that what we are seeing on ground is that China exports are improving what it was in last 2 quarters. So once the China exports improve, the freight rates will definitely go up, because they will need space. So today we have ample space. Demand supply is in abundance, because the space out of China is not getting utilized. So we are hopeful that will get utilized in coming quarters. So China on ground, the China rates are improving, and once that starts happening, our freight rates will also be going up. So that's the reason.
Okay, sir. Okay. Best of luck, sir.
Okay.
Thank you. Ladies and gentlemen, as there are no further questions from the participant, on behalf of Tiger Logistics India Limited, I conclude this conference. Thank you all for joining us, and you may now disconnect your lines.